Good morning, everybody. It is Tuesday, April 18th, 2023. CEO of Coinbase, Brian Armstrong, says he will leave the United States if the SEC doesn't get their shit together. House Republicans are calling for Gary Gensler's resignation. That is today in Web3. Boy, do we have a show for you today. But before we get into those headlines, please make sure you like, subscribe, and share this. And if you're listening to podcast form first, thank you very much. But also, if you're on Apple Podcasts or Spotify, click those 5 stars and leave us a comment. Let's get into those headlines. Coinbase's CEO, Brian Armstrong, indicated that the crypto exchange would consider moving away from the United States if the regulatory environment for the industry does not become clearer. He said anything is on the table, including relocating to wherever is necessary. And he continued to say, I think the United States has the potential to be an important market for crypto, but right now, we are not seeing the regulatory clarity that we need. I think in a number of years, if we still don't see that regulatory clarity, we may have to consider investing elsewhere in the world. Now, Armstrong was in the UK talking about the FCA, saying that because the securities and the commodities both fell under the FCA's purview, it was easier to deal with the United Kingdom. As you know, here the CFTC and the SEC shares that responsibility. And to that, he says, it's like having a turf battle. We actually have contradictory statements from the heads of the CFTC and the SEC coming out every few weeks. How's a business going to operate in that environment? We just want a clear rule book. Now, can we believe that Coinbase is actually going to pick up and leave the United States? Well, why shouldn't we? Even though they're a little bit smaller, Bittrex said they're going to do the same thing. As you guys remember, US crypto exchange, Bittrex said they're going to exit because of the regulatory challenges. And the CEO said it's no longer feasible to operate in the US market. But it seems as though they did not get out fast enough because the SEC is suing them, and they're suing them for operating an exchange selling unregistered securities. The charges against Bittrex allege that the Seattle-based exchange failed to comply with securities law by not registering with the financial watchdog in several areas, and they failed to register as a broker-dealer, exchange, and clearing agency, taking in at least $1.3 billion in illicit revenue between 2017 and 2022. And here's the thing I don't get. They've been running an exchange, a business in the United States since 2014, which is called a decade. And let's put this into perspective. You start a business at 33 years old. You're now 43. You now have 2 kids, a 10-year-old, an 8-year-old. You're going about your daily life. And then your business that you've been operating for 10 years suddenly goes kaput. And that's why I'm giving this news story the bullshit award of the day. Well, in this lawsuit, the SEC is alleging that there are securities that they're trading on the site. And those securities, in air quotes, are OMG, Dash, Monolith, Naga, Real Estate Protocol, and Algorand. And here's the kicker about Algo. It seems as though there's multiple posts on Twitter of Gary Gensler himself before he was the chair of the SEC promoting Algorand as a great platform. Now, I know this is different by promoting a technology than trading it on an exchange. However, don't tell me that somebody didn't buy Algorand, that the future SEC chair, Gary Gensler, and then an MIT professor was singing its praises. It seems pretty hypocritical. Ironic even. The irony does not go past Washington. And that's why Representative Warren Davidson is introducing legislation to fire Gary Gensler over his crypto overreach. He said, to correct a long series of abuses, I'm introducing legislation that removes the chairman of the Securities and Exchange Commission and replaces the role with an executive director that reports directly to the board, where the authority resides. Now, I don't want to comment on the structure that he's proposing. I would have to think about it a lot more and look into it. However, it's about damn time. I mean, just merely the conflicts of interest and the connections that he had to, say, Sam Bankman-Fried, Caroline Ellison, her dad, who was also in MIT, who was the chair of the Department of Economics. Also, just the facts that he met with Sam Bankman-Fried and members of FTX so many times. Why would we not be investigating Gary Gensler? And then we still allow him to make regulations on crypto. It doesn't even make sense. Well, Warren Davis's call for action was just the tip of the iceberg. By the way, he's a representative from Ohio. Because just a couple minutes ago, the House Financial Service Committee put out this tweet saying that all committee Republicans, led by Chairman Patrick McHenry, sent a letter to SEC Chair Gary Gensler, blasting him for trying to force digital assets trading platforms to come in and register under his non-existent registration process. The only thing I really want to say about this is that please notice that it's all Republicans asking for clarity of regulation. And as somebody who ran for Congress, as a Democrat, I want to say to all my fellow Democrats out there, What the hell are you doing? Why aren't you also calling for clarity in regulation? How can we follow the rule of law if there is no rule of law? We need to promote innovation here in the United States. And if you just want to kick out crypto and blockchain and this technology and stifle it before it even starts, then just go ahead and say it. And maybe that's what you're actually doing by not supporting the industry. But please, don't make this a partisan issue. Innovation and technology and growth and promoting businesses within the United States should not be partisan. Moving away from Congress, let's talk about AI. This headline caught my attention, that crypto bumped to the backseat as AI investments accelerate. I'm gonna tell you why that's a weird headline in just a little bit. But venture capitalists are saying that artificial intelligence is a shiny new thing and that VCs are throwing money at it, leaving the once red-hot crypto projects failing to find funding. Miston Labs co-founder Evan Chung said multidisciplinary venture capitalists are increasingly turning their attention to artificial intelligence investments, driven by the technology's proven value to customers. ChatGPT came out, and developers are building projects and applications for customers and developers. Widespread, large-scale use cases are immediately possible. In crypto, the industry has been building products for crypto people, and that is what I will agree with. When ChatGPT came out, you saw product fit across industries. Not just an industry, but all industries. I mean, honestly, it's endless of what you could do with this software. It captured imagination. It's no surprise that it's going to capture funding. But I know what you're thinking. Why aren't the two working together, AI and crypto, Ethereum? Well, they are. We've already seen AI's value in smart contract auditing and code assistance, for example. So, AI has a place in every industry. But don't think that VCs are leaving crypto for AI. Let's talk about that a little more in today's crypto prices.
Here comes the money.
Here we go. Money talk.
And the time is 9:30 a.m. Eastern Daylight Saving Time. We have Bitcoin sitting at $30,316. It just popped up 3.3% in 24 hours. And like I said, if you think AI is taking all of the money from crypto, well, first of all, I just said that Bitcoin is at $30,300 some dollars. But also, Bitcoin fund inflows topped $100 million in 1 week alone as investors flee to safety. The economic uncertainty globally is forcing investors to figure out where to put their money. Bitcoin, gold, real estate, T-bills, where is the money going? Well, 100 million, actually 104 million just went into Bitcoin. And another really bullish statement, you might have never heard of the reserve risk multiple. Right now, it's signaling a continued Bitcoin price rally for the months ahead. And if you see this chart below, every time this risk multiple goes above zero, we have higher and higher prices. And besides 2020, when we had a pandemic and it broke the cycle, it looks as though we're going to see higher highs for the time to come. Oh, unless there is a black swan event. Ethereum sitting at $2,109, up 2.1% in 24. Oh, I have some Ethereum news for you. Remember when the new upgrade was happening and everybody was saying that Chappelle is going to tank the price? Well, I told you that because you're allowed to take out ETH now from staking, you're going to have more people wanting to stake their ETH and get those returns, that 4% to 7% APY. Well, that's exactly what happened. Because more people are staking than withdrawing. As of April 17th, the ETH staking volume of 124,000 ETH exceeded the volume being withdrawn for the first time. Basically, the staking is doubling the withdrawals. Let's continue with the prices. Tether's number 3, Binance is at 344, up 1%, and USDC is number 5. Rounding off the top 10, we have XRP, Cardano, Dogecoin, Matic, and Solana. Our total market cap is 1.28 trillion, a BTC dominance of 45.9, and an ETH dominance of 19.7. And thank you for watching. And until tomorrow, happy hodling, everyone. Hey everyone, the bull run is coming. It's coming quick. And you need to be up to date on everything that's happening in the Web3 space. So please follow us on Twitter and like, subscribe, share these videos so we can keep you up to date daily on Web3 news.